Alright everybody, it's Johnny from Acorn Wealth here. It's the 28th of March and we're about to head into an interesting market. We're closing in on the end of March. It's been a kind of iffy month back and forth. Of course, as we all know, we have stayed below the open range of options expiration Friday last week. A high of 1883.97. We have continued to trade lower than that through the rest of the week as we had expected, and we're now going into a critical time as we close in on the 1st of April, being next Tuesday. Why is that important? That'll be the first day of the month, and that's most likely going to set the range for where we go for the month of April. If we break higher than the top of the range on April 1st, we're likely to be bullish. If we go below, likely to be bearish. What do we have left in between? We have just a few days in between now and then. If we want to speculate that we're possibly holding a downward channel, we're looking at this type of a trend line, which brings us back to the open range of March, which is the low over here of 1834. Either way, it's quite likely that we could have a bit of a drop down or a test of this area and a possible rally back up. Only a few trading days left until the next test point though, so I wouldn't be getting too bullish or bearish either way, which is why I'm just looking at a couple of small positions to maybe play intraday or and most likely get out of all of my positions come Tuesday. The first stock I was looking at is a play on oil. It's Endeavour International. You can see that this stock has previously had a big rally that stemmed from this same price zone back here on Monday, June 24th, going from $3.07 to a high of $4.18. So we're talking about like a 30% rally in a very short period of time. Could we have a similar reaction? It's possible. There's pressure on oil prices, and there's no reason why we couldn't see a nice little 10% pop. I'm looking at the this is a conservative, as I said, more like an intraday trade, where we're going to possibly pop up from this 337 area to just under the 360 mark. So for the intraday players out there, here's potentially easy 8% that could be made on E&D. Obviously watch to make sure it holds this support level as a support / stop zone. But there's the upside that we could have on E&D. The other one that I've been watching, which in fact was brought to my attention last night, was a stock called CALD. It's not as high probability as some of the other shorts we've been following recently, like Facebook. For those of you who've been following our picks, this was a beautiful short that we picked at $70, traded all the way down to our target at 60.33. That was a beautiful one. So those are, the cream of the crop. But here's one that did make the scan, because this has had a long-term trend line, as you can see, all the way from back here on May 6th of 2013. It's been holding the support zone until now. It just broke down, and if you want to zoom in a little bit here, you can see that it's broke beneath that, rallied and retested that resistance from beneath yesterday, and if this could be a speculative short from this position, certainly if we break below this support zone, there's it's got some room to fall. The support zone, next support zone doesn't really come into place until the 200-day moving average here, which is currently finding itself at 1025. So from 1187 where we are currently, that's a good 13-14% drop. So those are the two stocks we're watching for potential trades today, and that's what to look for in the market going into next week. Hope you have a profitable day and a great weekend. Happy trading.